We are 3 weeks into the 30-day stock challenge, and ChatGPT is still winning. Check this out. Urban Outfitters continues to be a strong performer, though you can see declines here more recently, and we'll talk about the weekly performance in a little bit here. Microsoft follows, and then J&J, and then you got EQT before you get all the way down to the S&P 500. So 4 out of the 5 stocks that we picked continue to be ahead of the S&P 500. But the story starts to get a little bit more complicated when you look at just the weekly chart. So let's check this out. In the past week, the S&P is in a respectable position, only being beaten by 2 out of the 5 stocks that we've picked for the portfolio. You can see it here, it's up 1.6% in the past week. Microsoft is up about 2.1%, EQT up 2.4%, J&J not up in the past week. You can see that Urban Outfitters is beginning to decline here over the past week, and its relative performance to the rest of the stocks has been lower. So are the ChatGPT picks running out of steam? Should we be thinking about picking different stocks here in the final week or removing some stocks to protect our gains? Let's dig in to find out. If you're just joining us during the ChatGPT versus the S&P 500 challenge, about 3 weeks ago, we started a process to figure out if ChatGPT could beat the stock market. We used a group of prompts to pick a select group of 5 stocks that ChatGPT chose for us to see if they would beat the stock market over the next 30 days. You can check out that playlist in the description below, and you can see how ChatGPT has performed against the S&P 500 on a week basis. This week, like we just talked about, Microsoft is in the lead in the past week, up 2.4%. Urban Outfitters, which was one of our strongest performers, up more than 14% over the first 2 weeks, was down 4.1% in the past week. J&J up 0.9% in the past week. EQT up 1.8% in the past week. GPI flat, which is respectable for the stock because in the first 2 weeks it was the stock that was most down of all the stocks that we had picked. And LPLA, which is a more recent pick from the last 2 weeks, it was a stock that ChatGPT suggests that we substitute GPI for, was down 1.8%. Overall, if you look at the last 3 weeks, 4 out of the initial 5 stocks that we picked are beating the S&P 500. That's Urban Outfitters, Microsoft, J&J, and EQT. The S&P 500 is only up 0.4% in that time. So we need to see if ChatGPT can continue to outperform over the next 7 days, and if it's going to be necessary for us to reposition our portfolio in the last week in order to maintain ChatGPT's lead. In totality, if you had invested the same amount of dollars in each of the stocks that we initially picked versus the S&P 500, you'd be up 2.45% with the S&P only up 0.4%. If you analyze that performance, you'd be up significantly over the S&P 500 over the course of the 3-month, 90-day, 6-month, or year. So we're going to begin the process of evaluating each stock to see if they should remain part of this portfolio for the next 7 days till the end of the challenge. And so the prompt that we start with is we tell ChatGPT to evaluate each of the stocks based on updated performance, fundamentals, technicals, macro, and news. What should we expect over the coming weeks? So let's start with Microsoft. Up 2.4% over the last week. For the period of the 30-day challenge, it's up 3.3% versus the S&P, which is only up 0.4%. It reported strong revenue growth and earnings per share growth. Its cloud business continues to dominate, up 22% year over year. So it's got some recent catalysts. Barclays just deployed 100,000 seats of its Copilot product into its business. That's roughly a $360 million revenue potential for the business. That's just one company out of thousands and thousands of companies that could deploy Copilot. From a technical perspective, its 20, 50, 100, and 200-day moving averages indicate buy signals currently. The AI, from a macro perspective, AI and cloud continue to be the dominant tailwinds for this business. Now, there are some downsides with EU scrutiny. In Europe, recently announced a restructure of its workforce. It's planning a reduction of 3% of the team. So this one seems like it's going to remain in the portfolio. It continues to be a core investment in the short term and long term. So I think we're going to keep this one. Next, we look at J&J. So it's up 0.9% over the last 30 days. It's up 2.4%. Relatively strong revenue and profit growth for a healthcare name. It's also a defensive name, so getting 2.4% top line revenue growth and 7% profitability growth is great for a stock like this. From a technical perspective, its moving averages are neutral. There really isn't that much more to say about the stock. I mean, it's just a core defensive name and should remain in the portfolio just for balance, with us recognizing that if something significant happens in the stock market, it's likely to weather the storm pretty well. And that's what it's done over the past few weeks. So let's look at EQT. So EQT is a name that's tied very strongly to the volatility in the natural gas market. In fact, in our last update, ChatGPT suggested that this might be a stock that we pull out of the portfolio due to the volatility in the natural gas market. But we kept it in because from a fundamental perspective, there continues to be a strong demand for natural gas in the short term and the long term. There's really no major additional recent news on this stock. stock, and really the drivers for its performance is natural gas movements. Maybe we should stay away from names that are tied to the commodities market, as there's not going to be a lot that's going to drive them from a fundamental basis within the space of 30 days. Although there's some businesses in the power segment and energy segment that have seasonal characteristics to them, and they could make for good portfolio picks. So we're going to keep it in the portfolio for the duration of the challenge. All right, let's look at Urban Outfitters. So this one is one we really should pay attention to. So it's performed really well, about 10.4% in total since we started the challenge, but it's been down 4.1% over the past week, and we're in danger of losing outperformance. What drove the outperformance for the stock when we started the challenge was its incredible profitability growth. It delivered $1.16 in EPS versus 81 cents expected, a 43% beat. Now, when we look at what ChatGPT says about its technical performance, it says it's overbought and there's a risk of a short-term pullback. Now, we've only got 1 week left in the challenge. This might be one where if we own the stock, we might want to trim or cut it out of the portfolio entirely in order to protect our gains. From a macro perspective, nothing much has changed with this business. It continues to be a business that's impacted by tariffs, both positively and negatively. Negatively from the perspective that it's importing a lot of its products from outside of the country, but also it's not marking down its products as much, which means that it's not discounting products to consumers. Analysts continue to be bullish on the stock, but there's some negative aspects to it as well, with its various technical performance, as well as some fundamental issues related to increases in inventory and its overhead expenses for that business. So what would you do with Urban Outfitters? Would you take it out of the portfolio just so that we protect our gains? Well, let's keep going and see what's going on with the other stocks, and then we'll make that decision a little later. All right, GPI is one that we should have taken out of the portfolio a few weeks ago, but for the purposes of a challenge, we just wanted to see how the stock was going to perform for the duration of the portfolio. In the last 7 days, it's been holding steady at 0%, so not up and down in the past week, even though the S&P was up slightly, and it's been a laggard for the duration of the challenge. So in the last 3 weeks, down 4.8%, still up year to date by 18%. So probably for a long-term hold, this could be a great stock to own. Now, interestingly, this stock is sitting above all its moving averages, which would indicate bullish momentum, which is part of why we said, okay, let's see how it performs over the next few weeks. But that bullish sentiment related to its technicals has not translated to positive stock performance for us yet. So no material news with this business. Its price was upgraded by Citi to $495 and they maintain a buy on it. So that's one positive piece of news. And like we just stated, its technicals indicate that it's got some bullishness associated with the stock, though that hasn't played out for us yet. So we've held onto it for this long, we might as well just keep it in. The final stock that we added to the portfolio after the initial selection of stocks was LPLA. And this was a stock that ChatGPT suggested we replace GPI with. And that doesn't seem to have been a good decision because it's down 1.8% in the last week, and over the last couple of weeks, it's been down as well. So for LPLA, it's in the portfolio now, and we've got a week to go. We might as well just keep it in. So the next question I asked ChatGPT was to rank all 6 stocks based on the macro context, technicals, and recent news. And then I also asked it to identify a stock that it would kick out of the portfolio if it had a chance to. So here's the rank it gave. So Microsoft, obviously the strongest of all the stocks that we have in the portfolio, up 2.4% in the past week, currently at record highs, continue to have upward momentum as a result of what's going on fundamentally with the business. Great tailwinds with its AI Copilot, as well as its cloud growth. It's got exceptional momentum across all fronts in its business. This second one, I'm surprised that ChatGPT is saying that we keep in the portfolio. So this is Urban Outfitters. So it's down 4.1% in the past week, like we talked about. So again, we're in danger of losing the gains that we got in the first 2 weeks of the challenge. From a long-term perspective, its technicals look good, but from a short-term perspective, they don't look that great. The reason ChatGPT is asking us to keep this one in is that it's saying that its pullback is seen as a consolidation, and it's awaiting a break above the $75 or $76 level to resume its uptrend. Okay, that's all well and good, but we have a 30-day period here to win with these stocks. So is it still a good stock to keep in? I'm not sure about that, but we should play out the entire 30-day cycle to see how things perform. Its ranking number 3 is EQT, up 1.8% in the last week, benefiting from positive volatility in the natural gas demand cycle. It's seen some demand from data centers and the infrastructure build, which is great. So ChatGPT is suggesting that we keep this one in, and I think I agree with that. Let's look at GPI next. That's the 4th ranked stock by ChatGPT. The main reason ChatGPT is suggesting we keep this one in is its technicals. But I'm not sure I fully trust ChatGPT's evaluation of the technicals of a stock, but this is part of what we should look at to evaluate how ChatGPT performs against us just evaluating the performance of the stock ourselves. Left to me, I would keep GPI, but I would take Urban Outfitters out of the portfolio at this point. J&J number 5 in the ranking, and LPLA as a 6th pick in the ranking. So then I asked ChatGPT which stock in the portfolio is now most at risk of underperforming in the next week because the challenge ends in a week. And get this, even though it ranked Urban Outfitters as number 2 from a portfolio perspective, it's suggesting that we kick it out of the portfolio. This is something that I did not expect it to do. But here it's looking at the company's technical performance on the chart and saying, hey, in the next week, you're likely to be down. There's been heavy selling on weak volume. It's in overbought territory, and it's lost its short-term support. So it thinks that there's a risk that the stock moves under $69 and could slide all the way down to $61, which is approximately where it started its bull run. The next question I asked ChatGPT was, which stock should we replace the weakest one with? And here it suggested Broadcom. So Broadcom is a semi-stock. It's got great fundamentals, and it's a participant in the whole AI infrastructure race. So here's a summary of Broadcom. It's got a strong technical foundation right now that is bullish, strong growth outlook coming into the next quarter. It's got a very huge macro tailwind with what's going on with AI. We're using ChatGPT right now to evaluate if Broadcom is a good stock. So that gives us kind of a clue that the AI race is on, and Broadcom is a participant in that. And then from a diversification perspective, we add some semiconductor exposure, which is great. So what's your perspective on ChatGPT's rankings of the stocks? We've only got 1 week left in the challenge. Why don't you comment below and let me know what you think? Do you think ChatGPT is going to ultimately outperform the market? I'm just as curious as you are. I'd love for you to like and subscribe to this channel if you'd like to know how the challenge ends. Thanks for watching, and I'll see you in the next one.